Hey guys, this is the Forex price action trading course. This is lesson number 10, how to use gaps in trading. Okay, let's get going. Okay, here's a lesson overview. First, I'll be going over how to find gaps. That means which time frames to look for gaps on and how much data we have to comb through. Then I'll go on to explain how to chart gaps. Now this is about which price levels to draw the lines that represent the gaps. And then finally, I'll go on to how to use gaps in trading. Okay, so let's go on to how to find gaps. Alright, number 1. Find gaps on the monthly, weekly, and daily charts. Okay. Alright, so whether you're a long-term trader or a short-term trader, all traders could benefit from using the monthly, weekly, and daily charts to find gaps. Now this is because at a basic level, the higher the time frame's gap, the stronger the gap. So in other words, by its very nature, if all things remain equal, a gap on the monthly chart is stronger than a gap on the weekly chart. And this relationship is true all the way down to the tick chart. So a weekly charts gap is stronger than a daily charts gap. And furthermore, a daily charts gap, if all things remain equal, is stronger than a 4-hour charts gap. Okay, so whether you're a long-term trader or a short-term trader, all traders can benefit from using at least the monthly, weekly, and daily charts to find gaps. Okay, so let's go on to number 2. Alright, so gaps come in all sizes. The bigger they are, the stronger. But don't forget to find the smaller gaps also. Okay, so let's start looking for gaps. We'll start from the right side of the chart. And immediately, there's a gap right here. Okay, so let's draw some lines to represent it. Right here and right here. That's the width of the gap. Let's keep going. Okay, let's keep going. Okay, and there's another gap right here. Okay, so let's draw lines that depict the gap on its width. Okay, so if you look at these two gaps, you can see that this gap up here is slightly smaller than this gap right here. Alright, so gaps come in all sizes, small, medium, large, huge. And here's another basic concept, is that the bigger the gap, the stronger the gap. Okay, so this gap right here, since the width is slightly bigger than this gap up here, this gap is stronger than this gap, simply because it's bigger. However, that does not take away from the fact that these small gaps also have strength in it. So when we're finding gaps, whether it be a small gap, or a medium gap, or a large gap, we want to find all the gaps that we can find, regardless of its size. Okay, let's go on to number 3. Okay, start finding gaps from the monthly chart and work your way to the lower time frames. Find gaps on every time frame you use to gauge the strength of the longs or shorts. Alright, so we want to start finding gaps from the monthly chart and start working our way down to the weekly, then daily charts, and so on. So like I mentioned earlier, all traders can benefit from using the monthly, weekly, and daily charts. However, if you're using the lower time frames, for example, the 4-hour chart or the 1-hour chart, to gauge the strength of the longs and shorts, or in other words, if you're using these lower time frames to trade, then you want to find the gaps on those charts also. So hypothetically, if trader A uses the monthly to the 1-hour charts to trade, you want to find all the gaps on each of those time frames. Okay, so let's go on to how to chart gaps. Alright, how to chart gaps. Number 1, set a horizontal line for current price. Okay, let's go ahead and do that. Alright, so if your platform has the function of depicting current price with this white line, then you won't need to do this. But if your platform doesn't, then we want to set a horizontal line to always know where current price is. Okay, so let's do that. Right, so current price is here. We'll set that horizontal line at that price level. Okay, let's go on to the remainder of that text. Alright, choose a different color for differentiation. Alright, so in order to know where current price is all the time, we want to use different colors for the gap levels and the current price level, just to always know where current price is in relation to the gap levels. Okay, so in this case, we chose red. Let's go on to number 2. All right, only draw the lines that are close to current price. Okay, so when we start charting gaps, we only want to chart the gap levels that are close to current price. In other words, if we find gaps way down here at these levels, we do not want to chart them, simply for efficiency's sake, and more importantly, so it does not give us a faulty bias. For we don't know if price will ever get down here. So if we don't know if price will ever get down to these far levels out here, then there's no need to draw those lines. Okay, so let's only draw the gap levels that are close to current price. Okay, let's go on to number 3. Okay, number 3. Go through the entire data and set horizontal lines at both ends of the gap. Moreover, use the open and close of the candles to draw these horizontal lines, and not the wicks. Okay, so let's go ahead and demonstrate this. Okay, so like I mentioned earlier, we want to start from the monthly chart. Okay, so we set our current price level. Let's start looking for gaps. Okay, we'll start from the right side. Found a gap right here. So let's add a horizontal line right here. So we want to place the horizontal line at the open and closes. Okay, so we'll put one right here at the close on this candle right here. Then we'll set another line at the open of the next candle, which is right here. Okay, again, for differentiation, we should change the color for the horizontal lines used for gaps. So let's go ahead and do that. Let's go ahead and make this a fluorescent green because it pops. Okay, let's change the other one also. And fluorescent green. Okay, let's keep charting gaps. We'll keep going, keep going. Okay, there's another gap right here. So let's draw those horizontal lines. One on the close on the first candle. And one on the other side where the next candle opened. Okay, so this is still rather close to current price, so that's okay. Let's keep going back. Okay, so there's another gap right here. However, this gap is very far from current price. Recall, this is a monthly chart. This level is roughly 1,500 pips away from current price. So we're not going to draw this one. We'll keep going. Looking for gaps. Looking for gaps. Are none so far. Keep going. Keep going. Okay, so there's one gap right here, right at this level. It's close to current price. So let's draw some horizontal lines there. One at the close of the first candle right here. And another one at the open of the next candle right here. Okay, and immediately we have another one right here. So let's draw some there. It's close to price. One at the close of the first candle. And another one on the open of the next candle right here. Okay, and we'll keep going. Alright, so that's the end of the data for the monthly chart. So let's go on to number 4. Okay, number 4. Repeat the process 1 through 3 for all time frames that are used to gauge price strength. Okay, so the charting that we did on this monthly chart, if you're using the weekly, daily, 4-hour, and 1-hour charts, you want to repeat that process for all these time frames. On the other hand, if you only use the monthly, weekly, and daily time frames to trade, then those are the only charts you need to repeat that process on. Okay, let's go on to the remainder of that text. Alright, so for efficiency, delete the gap levels that are furthest away from current price. Okay, so on this monthly chart, we charted 4 gap levels. One right here, a medium-sized one here, a small one, and another medium-sized one up here. Now, just for efficiency's sake, and simply because the chart looks cleaner, let's delete the gaps that are furthest away from current price. Okay, so we don't need this one. Get rid of that. We don't need this one because we have this guy right here. Let's get rid of these guys. Okay, so cleaning up the chart in this way just makes it more efficient in terms of trading because you won't have to worry about levels way up here and way down here where price may never reach. Okay, so keeping your charts efficient allows us to focus more on present price action. All right, so let's go on to how to use gaps in trading. Next slide, please. Okay, how to use gaps in trading. Okay, number one, gaps are at its core horizontal levels of support and resistance. When price comes in contact with it, future strength in the opposing direction is created. Okay, let me explain that. So fundamentally, these gaps are levels of support and resistance in which price, if it comes in contact with it, creates opposing future strength. So if price comes up here and comes in contact with it, this gap creates opposing future strength. In this case, is down. On the other hand, if price comes all the way down here and comes in contact with this bottom gap, this gap creates opposing future strength. In this case, is long. Okay, so at the fundamental level, gaps are horizontal levels of support and resistance, with one minor twist to it. So let me explain that to you. All right, so moreover, the entire width of the gap becomes support and resistance. Okay? So the difference between normal trend lines and gap trend lines is that this entire range or the width of the gap becomes support. And this top one also, this entire range or width becomes resistance. So for example, if price falls all the way down here and touches the outermost line of this gap, well, this creates opposing future strength long. However, even if price gets through this first line and, for example, reaches this middle area of this gap, well, this middle area still will create future opposing strength long. And this will continue until price gets out of this gap width right onto the other side. So this entire width right here acts as support. And it's the same for resistance. It is not just the upper and lower boundaries of the gap that create support and resistance. It is the entire width of the gap that creates opposing future strength. Okay, so let's go on to number two. Okay, number two. The higher the time frame of the gap, the stronger its ability to create opposing future strength. Okay. All right, so I mentioned this earlier, but the higher the time frame the gap, by its very nature, is stronger than a lower time frame's gap. So again, a monthly gap is stronger than a weekly gap, and a weekly gap is stronger than a daily gap. So for example, let's take this monthly gap right here. If we find a gap on the weekly chart that is the exact same size as this monthly gap, well, this monthly gap creates more opposing future strength than a same size gap on the weekly chart. Okay, so that's a fundamental rule. The higher the time frame's gap, the stronger the gap. Okay, let's go on to number three. Okay, number three. The bigger the gap, the stronger the ability to create opposing strength. Think of gaps as walls. The thicker it is, the stronger it is. Okay, so if we take these two gaps and think of them as walls, so this wall right here is roughly 2 to 3 times thicker than this wall right here. Thus, a thicker wall creates more opposing future strength than a wall that is thinner. Okay, so that's another general rule. The bigger the gap, the stronger the gap. Okay, in latter lessons, when we start showing examples of gauging future price strength, I'm going to constantly re-explain these rules. So for the time being, just remember those two general rules. So the higher the time frame's gap, the stronger it is. And the bigger the gap, the stronger it is. Okay, let's keep going. Okay, next slide, please. Okay, so that was it for that lesson. In the coming lessons, we're going to start going over how to gauge the market bias. In other words, the future strength of the longs and shorts using the price characteristics that we learned up until this lesson. Okay, so now that we know how to draw trend lines and we know how to locate fake and legitimate price patterns, we're going to start using those price characteristics to gauge the market bias. Okay, so the next lesson is going to be using trend lines to gauge the market bias. All right, like always, if you have any questions about this lesson, please leave it in the comments. So I hope you guys have a great rest of the day, guys. And thanks for watching. Okay, bye.